Hello and welcome to the first episode of the 2025-2026 Spartan Journal podcast. I am Rohan Modi. I am the director of the Spartan Journal podcast. I am also your guys' treasurer. I'm a sophomore finance major.
My name is Cameron Witt. I'm the lead host. I'm a sophomore studying finance, and I'm really excited to get going on the Spartan Journal podcast.
My name is Harsha here. I'm a co-host on Spartan Journal podcast. I'm a freshman who's majoring in finance. And again, I'm also looking forward to this.
My name is Andrew Morse, co-host. I'm a sophomore pursuing finance.
So a large portion of what we're going to be doing here, we're going to be coming out with bi-weekly episodes with a primary topic, a secondary topic, and then obviously our conclusion topic. Primary topic is typically going to be a large macroeconomic thing that we're all pretty interested in. Secondary thing is probably going to be a little bit more niche of a topic. And so, this week we're excited to talk about the two topics that we've got planned. Moving forward, probably be a bi-weekly thing. We'll be talking to you guys at our meetings as well, kind of summing up what we've talked about for the week. So, so you want to get started?
Yeah, do you want to go over some market recap?
Yeah. So, markets this month, the S&P 500 index was up 4.27%. The Dow was up 4.15%. The Nvidia was up to actually 8.68% this past month. The Russell 2000 was also up 2.55%. So we want to get into our main point about Warren Buffett and him stepping down for Berkshire Hathaway's.
Jump into it.
Yeah, let's do it. So, our main point here is going to be we're talking about Warren Buffett stepping down as CEO. He's been CEO for, I think, around 60 years now. Berkshire Hathaway,
65 or something like that,
Yeah, Berkshire Hathaway being the 11th biggest company by market capitalization, a little bit over $1 trillion, so this is a big deal. Big deal for the industry. We're going to kind of get into what this means for investors, advisors, and the whole industry as a whole.
And Buffett's 95 years old as of currently, and the new CEO that's going to be replacing him is Greg Abel. He is the company's vice chairman as of currently of non-insurance operations, so he'll be taking over.
Yeah, and he's a very reliable guy, as everyone kind of looks up to him because he's been in the company for, I believe, around 20 years, and he's got a high established company. Warren Buffett has no doubts at all.
And I think one main point that I guess we haven't really brought up yet, but I want to bring up now, is that Warren Buffett's 95, as Harsh said, right? So they've been kind of planning to who's going to be his replacement. Not only who's going to be his replacement, but the investment strategies going forward after he steps down. Because I'm sure he's going to have a minor role in Berkshire Hathaway's that just kind of stepping away from it. So
Do we think that this is going to really change? Greg Abel coming in. Do we think that the whole company is going to really shift, or what are our thoughts on that?
I think it's silly to assume the company's going to change. We said he's 95. You guys know the cognitive abilities of a 95-year-old. They have wisdom and knowledge, but they're not necessarily on the top of their game. Nothing to take away from Warren Buffett, but I think that this company has been run a little bit outside of Warren Buffett for a little while now.
Yep.
So I don't think a lot's going to change personally.
I think I want to say, just to touch on that, a lot of the big picture things won't change, I think, but a lot of the day-to-day operations that could in 2, 3, 4, 5 years kind of affect. I think, right now, I think it's safe to say that the whole company is going to change. All investor outlook is going to be negative, positive, whatever it is. But I do think that, in 3 to 5 years, it is going to look a lot different than it is now, just because when you have somebody in the driver's seat running day-to-day operations, in 5 years, that's definitely going to change. The more used to they get, the more used to that Greg's going to get used to the role. I mean, he's going to start to change little tiny things.
With all this said, I feel like Warren Buffett is still going to be kind of going until he can't go anymore, because, he's quoted multiple times, like, he's not going to just go home, sit on the couch. He's still the same guy he is. He's the greatest of all time. Yeah. He's the greatest investor of all time. Like, he's gonna keep his mental aspect of what he thinks. He's gonna keep incorporating it, showing up to the company, and even he's gonna be presenting the Thanksgiving annual Berkshire speech, I think, for the next few years until he's not around anymore. But
I don't think he gets stopped if he wants.
He's still committed.
Definitely. I think there's a phenomenon which is called the Buffett premium. It basically states that people are going to be more invested in the company. Their stock's going to go up more if once Buffett is in that seat of CEO. I think Greg Abel, there might be some short-term impact of having him as CEO in terms of their outlook. Maybe it shifts to being less long-term, more short-term. Just kind of depends on Greg's philosophy, but then I think he might actually assimilate into Buffett's role better and his philosophy. So that's my take on it. But like, what do you guys think about the fact that the stock has gone up by 5.5 million from the year 1965 to like basically now?
5.5 million percent.
Percent.
Wow.
I think honestly like a large portion of what a stock is, like built off of is what, you look at the past, right? You look at the last quarter, the quarter before that, the year before that, even the month before that, and that kind of, increases, investor potential. But I think a lot of what has to do is who's at the forefront, right? You see the same guy producing returns for the 15, 20, 25, 30 years, you're going to trust him and you're going to trust, what he's invested in.
And he's a great guy all around. I mean, he's got an estate of around $150 billion, and what he's going to be doing with that money once he's stepping down, he's going to be donating most of the money to his children's foundations. He's a great guy all around.
99.5% of everything he has.
Exactly. Yeah. So.
Well, it was written in the pledge. There's a billionaire's pledge where everybody there's billionaires who signed it, and they kind of pledged that they would give away a lot of their wealth once they passed away. So
it is still the end of an era, though. I will say it is definitely the end of an era.
But I think that is how you stay on top. So long as you have to be genuine, you have to be a good person, and people notice that, they're going to hop on the train and they're going to stay on that train. So that's something great for Warren Buffett, and it's really sad to see him go. But it's, at the same time, like he needs to enjoy it. He needs to enjoy himself a little bit, which is great for him. And but seriously, an end of an era. I think one thing to think about is how is this going to affect investing? Is this going to change? Is it going to be more volatile in the future to things that Berkshire Hathaway is trading with, just because people have eyes on them now?
Yeah.
Warren Buffett, we all know he had a lot of influence in the whole industry. Is that going to change now? Is there going to be a new face? And who could that be?
I think looking back 5 years, like if we look at back at this point, 5, 7, whatever it is years down the line, nothing's really going to change as drastically as we think it is right now, right? I mean, like whenever any big, whenever anyone steps down or anything like that happens, and in companies, everybody, investors tend to overreact to it.
Yeah,
and I think right now,
very short term.
yeah, exactly. And I think because of that, there might be like a feeling of maybe he doesn't know what he's doing, maybe he does. Maybe he's going to take it to an extreme level. Maybe he's going to plummet the stock and plummet everything that they're investing in, invest in the wrong things. And in terms of keeping, if they do switch, someone here was talking about how maybe switch to a more short term strategy. What if that doesn't pan out for them, right? So I think because of that, kind of like half glass empty kind of look that investors might have with Warren Buffett stepping down, there might be a large commotion right now, but I don't think that really in 5 to 7 years, if we look back at this time, it's going to be around the same that it's always been.
Well, I believe like Berkshire has been through a lot of eras like that. Like I remember when Charlie Munger kind of left the company and he wasn't at those annual shareholder meetings. And like that was one point, and now like the last official shareholder kind of meeting happened this Monday, so last Monday. So that was again another big shift, and I think it's just a testament to how much the company might experience change in the short term, but like eventually it's not going to stabilize in the long run.
They've proven it, right? They've proven long term they're successful. It's hard to deny that.
That also comes because of Warren Buffett at the forefront, right?
True.
Because when you've got the greatest mind in all of it's like more like you were saying
for a reason.
He's
built his wealth for a reason.
it's like a long-term process that taking long-term investing into a route of how long-term can we get long-term can we turn this investment, right?
He made it pretty long-term, but he was 95.
And he loves his dividends. He loves large companies. And that's I think that's part of the reason why he's so successful. But
Moving forward.
Yeah. So primary topic out of the way. Secondary topic, looking more at international equities versus domestic equities. So this year, it's been no secret that by a lot of different means, there's been international equities have rarely outperformed, or have, I guess, for the first time in so long, outperformed domestic equities. And it's an incredible thing to look at because it can really shift how certain investors look at equities, how certain investors reallocate their portfolio. More importantly, where are they going to be making their money from, right? Are they going to be comparing their international equities to their domestic equities, or are they going to compare their international equities with their other international equities that they are, invested in?
I think a question of this segment could be how are advisors or are advisors going to reallocate because of this? Is this something that they're going to look at long term?
Yeah, this could go two different ways. I feel like we could look at how the S&P has been performing throughout the last 100 years. I mean, it's been outperforming the international stocks by almost 300%. So we could look at it that way, or we could look at it from a different perspective and look at how Asian companies like IT companies and AI companies are really just developing at a much faster rate than maybe some companies here in America. So maybe allocating to certain stocks in that area, like the Semiconductor Manufacturing International Corporation, SMIC. Sorry about that. That's a little. But SMIC.
SYC.
But yeah, just like specific companies, I feel like that are already like we can see that there's a very strong growth in the last few days, and that they're gonna like really develop over the long term. Investing in something like that. But then it could also be, we could also look at it like the long term, the S&Ps. I mean, it's going to outperform, especially with the earnings coming in, the high earnings from these hot, like well-established U.S. companies like, Goldman Sachs and Bank of America, very established companies, and they're reporting high earnings. Like that's just going to boost the S&P even higher than it's going to. I mean, so
Well, it's got to be said that this trend might not be here to stay, but it is a pretty big trend. It's a pretty alarming trend. I think that the margin between the international and U.S. stocks has been the highest it's been since like a decade or one and a half decades.
2009 or something.
Yeah.
Yeah.
In a minute. Yeah.
I know, yeah. So I think it's an alarming thing because there's a bias for a lot of U.S. investors, especially that they want to hold a lot of their holdings inside of what they're familiar with already. So what's on CNBC, what's on Wall Street Journal, or whatever. So I think this is kind of like an alarming statement for them, and it kind of says that maybe they need to increase their diversification across like international stocks. So that's kind of my take on it.
Yeah, these things that have shown to be reversible in the past. Normally, when the international equities do tend to outperform, it tends to snap back decently quickly. This has happened 3 times since 2010. Never this large.
Yeah.
So is this pattern going to continue? I'd have to believe so, but we don't really know. We've never seen
Can't really
anything like
predict
this.
anything.
I think regardless of what continues, I think it's honestly pretty cool. Like just thinking about it, like obviously, like domestic equities are what we're used to, and everyone in the U.S. typically researches domestic equities, but and looks more deeply into them. But I think it's honestly cool that because people like everybody's always forefrontedly looked at domestic equities as their primary if I'm investing in stuff that's on the New York Stock Exchange, Wall Street, stuff like that. I'm never really looking at what they're doing in Europe.
No.
You know what I'm saying?
But now they're actually performing.
Exactly. So it's like there's a whole portfolio reallocation thing here where it's like, okay, I could have my portfolio be 60% U.S. Equities, 20% international, and 20% is cash, right?
Yeah.
But because of that, am I reallocating that, right? Am I taking? There's some U.S. stocks that have not U.S. equities that just haven't performed well for me last 2 years, so I'm holding them for short term, even if I shouldn't be, right? Well, do I change this to a 55-40 kind of role? Do I lower my cash amount in my portfolio? Like there's just a lot of, because of how they're performing, there's a lot that goes into it, and I think that investors are, especially in the start of the new quarter, that with a rate cut coming maybe in December, we're looking at.
Yeah.
I think that also heavily depends on I think how the future of this heavily depends on a rate cut as well.
Yeah. What also depends on that, I think that the rate cut, if it does go through, if there's like a quarter point increase or a decrease, I should say, that might really affect how much money is flowing into U.S. markets versus international markets. I think that's so true.
We could also, on that point, we could see the American dollar rise with confidence in the U.S. markets. We know that, or we hope that the government reopens up here soon. Looks like that's what they're
I think they reopened today.
Yeah.
Oh, they did?
reopened. They fully
okay.
reopened today. Yeah. It's
Awesome.
the first time to build.
Everything's
I mean that's why investors are specifically looking. Like why if it was going to turn back, it would turn back now and then re-up. After the rate cut if there is one, right?
So yes, I mean, with more confidence in the American economy, we could see that dollar rise as well. We've seen that's down a little over 8% year to date when comparing it to some of the other major currencies.
Yeah. And when people have confidence in how the stock market's going to do, they're going to really feel more confident investing into it.
Uh-huh.
So with this said, domestic's going to outperform international, potentially. This could change, but when people have more confidence in something to perform, they're most likely going to put their funds into it.
Yeah, that's the trend we've
Yeah,
seen.
I mean, yeah. So
Yeah. Well, thank you guys for tuning into this week's podcast. We went over some great topics. You got to meet our amazing crew. We'll be back in a couple of weeks with new topics and a lot more stuff for you guys to learn. So thank you guys.
thank you guys.
Thank you so
Thank you.